Welcome back, investors, to Ticker Time News. I am Adam, and the stock market, well, it was headline driven today. After opening relatively higher, attempting to build on Friday's gains, the early upward momentum in the S&P 500 found some resistance around the 3,900 level, which is a critical level. And here's why. There are a lot of moving points here on the 3,900 live. This is the S&P 500 here in front of you. And you can follow along right at home. In the description of this video, there is a link to TradingView. Click on it. You can sign up for free. It doesn't cost a penny, and you can do all of this charting too, following along with us. So what I have here, there are two horizontal lines on here that are purple, right? And what they represent are the weekly expected move for the S&P 500, or specifically for the ticker symbol SPX. Now, investors on Patreon, you guys got this information yesterday, over 30 different products with their weekly expected moves. I hope you guys enjoyed it. This is what we're going to be doing every Sunday evening, releasing this for the upcoming week. It is fabulous. Now, back to that 3,900 level. Why is it so important? Well, we have a lot of interactions. Most recently, along here on the right side of the screen, we have that line as resistance, right? Price goes up to it, it taps it, it gets rejected, it falls back down. It has happened several times since reaching that point, going back to the 22nd of June, all right? Then we had a period of time where that area, 3,900, acted as support. So old support became new resistance. That is very popular in technical analysis. And then if we go back a little bit further in time, we can see over here, right above my head, there are a lot of interactions around that 3,900 level, acting first as resistance, then acting as support. Now, on its way back down, it acted as support. Now, currently, it is acting as resistance. So that 3,900 level is resistance right now. And what it would take to break above that 3,900 level is rising volume. So I'm going to open up the chart here just a little bit. I'm going to adjust it so we can get a better view of this. Just give me Give me one quick second to adjust the chart, and I'm going to bring it up here. Okay, just taking a little second longer so we can see the volume underneath here. Now, all of these red and green vertical lines towards the bottom of the screen, they represent volume for each day. This is a daily view on the chart. So each one of those represents the volume for the day. The blue line that is going across the top of those, that's your median, your average volume for each day, right? So if you're under that blue line, then that means you have lower volume than average. If it's above it, quite simply, then you've got above average volume. Now, for any significant move higher, you want to see above average volume. And just look right here. If we go back to this day here on June 16th, we have, and let me get the highlighter back out, we've got a burst of volume that is going above that average volume level. And then what did we see right after that burst of volume? Well, we saw a rally in the S&P 500, right? All right, good. We go back here a little bit further. Where's another one? Well, here's high volume. That is green. And what did we get because of that? Well, we got ourselves the snapback rally at the end of March. So my point is, you need high volume in order to break key resistance. Now, let me show you the flip side of that. Here we have a red bar. This is May the 31st right here, and it is above average volume, but it's above average volume in selling. What do we get? That was the peak right here of the rally before falling back down. So just want to make that point very clear. If you want to see big moves, moves that break support, that break resistance, you have to see, or you would want to see, strong volume, above average volume to help either push you above resistance or maybe even push you below support. So just something to watch out for now that we're here at this 3,900 level. Now, if you've been watching this channel for a while, you will know that there's another important level here on the S&P 500, and that is at 4,000. All right, so what I'm going to do here is I'm going to remove this black line here that was at 3,900. As a matter of fact, I'm not going to delete it. I'm just going to move it up to the 4,000 area. And just down a couple more points, down a little bit further, right there. So now this black line here shows you there's another area of resistance. And what we have right here, and I'm going to show you one other indicator to help understand this. And this indicator right here is called the VRVP. And what it's showing you is a volume profile on the chart. So it's showing you when there's big bursts of buying at what price point, all right? So what we see here at the 4,000 points, well, it lines up perfectly, get the highlighter back out again, with right above my head, this volume profile that sticks out right here, okay? And then what we have is a dip, right? There's not a lot of buyers buying in this area. But then our next big area lines up with this spot right here on the chart, okay? So 4,000, it's a big area to break through. And once we do, that next area that's going to be super hard to break through is around 41.75. And there are a lot of investors trapped in that area where the market rallied, right? And then it moved sideways. We had expansion and then contraction. There's a lot of money trapped up here, and there's a lot of investors who would like to get out of their positions with at least a little gain and not these super big losses that they're sitting on right now because the market just fell out from underneath them at that point in time. So a couple things to be watching there is that 4,000 level, and then also that that level up here at 41.75. So I hope that's pretty clear here on the different levels of support and resistance that we currently have. Now, for the S&P 500, the weekly expected move on the upside, and let me just double check here on the chart, SPX, the top side. Well, first let me say this. The options market is very efficient in what it does. And the options market has a 68% accuracy rate. That means 68% of the time, the options market is correct. And that's where we use a formula to come up with these weekly expected moves. Now, the S&P 500 is expected to move 87.75 points plus, which would be up, or minus, which would be down from Friday's closing price. So that's where we get the two purple lines here on the screen. Now, the top level for the S&P 500 up here is going to be 39.59 for the weekly expected move to the top. Weekly expected move to the bottom is going to be 37.75. That's where the option market says that by the end of this week, by Friday, the market, the S&P 500, should close within this range. So how can that help you? How can that help you in trading or investing? Well, it can help you find areas to go long, to go short, to take profits. That's what those lines are really there for. So looking at today's candle, all right, we see that it hit our resistance that has been in place since March on the S&P 500. This black line going down across your screen here, and let me use the highlighter to make it clear. Right along here. Oh, I guess I need to do it again. Didn't catch. All right, here we go. This black line right here, since March, has caught resistance, has caught price, put a stop to it, and sent it lower. So many times. Let me try to adjust this chart just a little bit, bring it down some. I want to get that March level in here too. So going all the way up here to March, way above my head, and we can see it. Right here, we went up, hit it, resistance, fell down. Here, we consolidated over to it, and then we went boom, straight down. That was a big one. Today, we went up and hit it. So what do we expect the market to do since it has now hit that resistance? Well, I would expect the market to fall. That's what I would expect it to do based on what it's been doing since March. Okay, I want to make sure I'm trying to be clear on this with how we're talking about it. So looking at how price has acted at this line all year long, I suspect it would be the same. Now, what could change this and cause price action to move above this, to break through that resistance line? It would take volume. That's what we started with, right? It would take a volume candle down here above the average range here for volume in order for price action to break above that resistance and get to the upper band for the weekly expected move. So there's a couple of cases there laid out for where the market could be headed next, tomorrow, Thursday, Friday, right? All right, so with this right here, one other thing to note is the 21-day moving average, right? It acted as resistance right here. It came down, it acted as support. It acted as a little bit of support to slow the market down before a big gap down. And right now, it's acting as support as well. So what we could be getting here is a wedge type pattern here, which would then cause the price to explode one way or the other, either up or down. And what's going to determine that is volume. If volume increases above this average right here, then that could potentially give a nice bounce off of that 21-day moving average and send us above that resistance level. But if we don't get that volume coming in, then there's a less likelihood that we will be able to hold above that short-term moving average and break that resistance. Again, sending us back down to the bottom of the weekly expected move. So just a little breakdown there, a little more deeper on the S&P 500 and where it could be going. Now, the market started today, and as a matter of fact, let me move to the 15-minute time frame, and we'll work from there. So let me just change this up real quick. I'm going to take this one chart pattern off there, close that out, 15-minute time frame. And while it's doing that, I'm going to hop over to the comments. Let's see here. The weekly expected moves is great. Helped with Amazon and AMD. I am super excited that worked out for you. That's what those weekly expected moves are there to do, to help you and understanding where price action could be going, so that way you make better trades and you can make better profits with that. So I'm glad to hear that. It'll come out every Sunday, and we'll change it up a bit with the stocks that we randomly just picked to do. The stocks that we picked this week to add into the weekly expected move list, they have earnings coming up soon. So that's one reason why I wanted to put those in there. Okay, here we are, 15-minute time frame. On the bottom, you can see the big spikes of volume. That represents the end of the day and the beginning of the next. So if we look at the past 3 sessions here, we started out real low, right? All the way down here. My head might be right, it's right above my head, real low. We rallied on Thursday last week. We gapped up right here, and we rallied Friday morning, but then we stopped and we moved sideways. Now, this was in last week's weekly expected move. This week, we had a little trouble here. We started off this morning pretty low, and then kind of immediately shot up here. We didn't start that low, but we started low. We shot up, and we thought this was going to be a great day, right? Everything was moving higher. Everything was looking higher. But what did it do? It ran right into that resistance area. And let me blow that up just a little bit so you can see it a little clearer. Just clean the chart up there a little bit. We're zooming in here to see today's price action and that black line that's at the top of the chart. So this morning, we open and we're higher, right? But right here, we run into this resistance area. We hang there for 15, 30 minutes, and then we fall, right? And then we move sideways. And then we get up here again. We attempt to try it again, but we didn't quite get as high. And then from that point on, we fell almost into the lows of the day. So the market, it started off worse. This point up here at around 10 o'clock this morning, okay? Give or take a little. We got the June NAHB housing market index, and it came in at 55. The drop from 67, which was last month's reading, to 55, which was July's reading, was the largest monthly drop in the 37-year history of the index. So this thing has been tracking for 37 years. And this is the biggest monthly drop except for one time in their 37-year history. And that one time was April of 2020. So just after the big March fall, we were still in major lows during April of 2020. After that, the market held on to modest gains and moved mostly sideways until a Bloomberg article, which came out and suggested Apple, ticker symbol AAPL, which lost over 2% today, plans to slow hiring and slow spending for some divisions next year. Why? To ease the impact of an economic downturn. After that news came out, which was right here, all right, right here, the market sold off on the news, and it closed barely off session lows. However, though, if you were looking for a bright spot in today's market, some sort of a silver lining or shining star, we actually had it. I'm going to go back to the daily view here. We had it in 2 different places. First up, Crypto, baby. That's right. Ethereum was up big today, but it is currently in a sell-off. Okay. I said this morning to our investors on Patreon that this is not a market turnaround and rally. This is a bear market bounce. As you can see, Ethereum, which is on here, and this is your daily view, going back to June the 15th right here, okay, all the way until over the weekend, we can say July 16th is when it first broke out of this compression right here, where Ethereum was just moving sideways, up a little, down a little, up a little, right? You have contraction in the market before you have expansion. And then expansion leads to contraction. Contraction leads to expansion. And it just keeps going. It's a cycle in the market. So that's what we're getting right now. We're getting a little bit of expansion, and it's to the upside. And that is wonderful. I am glad that is happening. Ethereum right now is outpacing just about anything. I mean, Ethereum at one point today was up over 17%. It was absolutely amazing, right? Actually, it got up to 18.17% today. That's crazy. That's incredible. Now, some of that is being given back. Ethereum is down 2.2%. Now, Bitcoin, for its own doing, did pretty well. It was up over 3% at one point today, and it got as high as being up 7.8%. And again, Bitcoin was in the same sideways moving pattern that Ethereum was in. We got a bounce today, breaking above it. But again, this isn't a place that Bitcoin is turning around and you should go long and throw it all in there. No, 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 no. This is just a bear market bounce. We haven't seen the bottom yet for stocks or for crypto. Just keep that in mind. Now, trading this is completely fine, and that's actually really good to do. So just remember, though, we are in a bearish bias until proven otherwise, okay? We are moving down and down and down. Just don't let that fool you when we get these bounces and runs. It's still a bearish context. Now, today with Ethereum, Bitcoin being up 7.8%, gaining $1,635. Ethereum, let me get this back on here. I want to see what the daily total was. Being up 18% or $243. You know what that shows me? That shows me that there is a ton of money sitting on the sidelines, and they're waiting. They're waiting for the right time to jump back in. And if that's you, and you've got money on the sidelines and you're ready to jump back in, or maybe you've gotten wrecked and you're building your cash pile right now so you can enjoy when this market finally does turn around. And if we go back here, stick to stocks, the S&P 500, I do not think we have seen the bottom yet. Those of you who have been watching for a while, you know this. I do not believe we have seen the bottom yet. And as I bring this chart together a little bit, and we raised, oh, I got the wrong thing on there. And we raise this up, you're going to see this little box down here that doesn't match up with anything that's happening right now. This purple line that continues to, go down and down. Let's bring it over here. This box right here, my investment thesis says that the S&P 500 will get this low by October. Now, I'm not perfect. I don't get everything right. I could have this wrong. Maybe I could have it wrong by a couple of months, either way, or by a few points up or down. But that's where my investment thesis says the S&P 500 goes. And looking at it right now, 32.75. That's a long ways from where we are at 38.30 where we closed. So if you would like to join us in beating this crazy market, let me just plug this real quick and then we'll keep moving. Then click the first link in the description to get instant access to our weekly expected moves, our trade setups, top 10 stocks in 4 different categories, pre-market insights, and so much more to help you achieve your financial goals. For example, the weekly expected moves, they let you know with a 68% accuracy rate where the market is headed for the week. This gives you insight on where to go short, where to go long, and where to take profits. This week, we included 33 products from S&P 500 sectors, major indices, sub-sectors, and individual stocks. This knowledge is incredibly useful. So get instant access right now by clicking the first link in the description. We'd love to see you there. And we're working on a Discord for our investing community and our investors on Patreon. Okay, now back to what's happening in the market. The early buying conviction in the stock market was fueled by a general rebound attempt, as well as the second bright spot in today's market. We had positive corporate news from 2 sources. Goldman Sachs, ticker symbol is GS. This was another bright spot in this gloomy market today. Goldman Sachs ended up 2.5% today. Looking pretty good. Let me just fix the chart here right quick. There we go. Okay. Bear market, you can see the overall bias is bearish. The other stock or the other company that had a positive spin or bright spot in the market was Boeing. Ticker symbol is BA for Boeing, right? They ended up flat on the day. So these weren't 2 bright spots because of how much they were up or down on the day, but rather what they said. Goldman Sachs reported better than expected earnings, and they approved a 25% increase in its quarterly dividend. Why do companies increase their dividend? Well, because they have cash on hand that they need to invest somewhere, and investing in their investors is a good place to be. Now, Boeing, it traded up on the news that Delta Airlines, ticker symbol is DAL, which they were up 3.5% today, will modernize its single aisle fleet with up to 130 Boeing 737 MAX jets. That was big news for Boeing, really big. It didn't really get reflected in today's stock price being basically flat. Now, also adding to the early sentiment was a Wall Street Journal article that noted the Fed is likely to hike 75 basis points at its next meeting. Duh, that's what they said they were going to do, and I believe that's what they will do. Now, this is versus the overblown fear of a 100 basis point rate hike. That's just pure FUD, in my opinion. If they wanted to do a 100 basis point rate hike, that's something they should have done months ago, not here in July. All right, let's move on to the S&P 500 sectors here. And let me just take a peek at the comments here. Hey, how's it going? Haven't been here in a while, but nice to see you're still here helping in that. Well, thank you. I greatly appreciate that. Would like to hear your take on TSM. Sure, absolutely. As a matter of fact, before we jump into the sectors, how about we do that? All right, Taiwan Semi. Now, actually, on my notes here, I have a couple things to mention about semiconductor space right now. The with Taiwan Semi and the semiconductor index as a whole, I don't think there's a lot of bullishness for them right now. The one reason why is what COVID taught, or a lesson to be learned from COVID, is that our supply chain is broken. And it's broken in many different ways. So right now, and I know this doesn't necessarily have to do with Taiwan Semi, but it does in the bigger picture of things. Now, what we have in our supply chain is a global supply chain. We get products from Asia, sent to America, sent to Europe, and it takes a while for those products to get from point A to point B. COVID taught us that. Even though we knew it, we thought that, this is a supply chain. It's been working out. It'll continue to work out. COVID taught us different. Right now, I believe we are in a transition of supply chains. And I believe supply chains are going to become more regional. Instead of America getting its chips from Asia, it'll be getting its chips from Europe or from the Americas. That cuts down on time and cost. And if the supply chain breaks down, it's a lot easier to fix if it's regionally based. So I think the era of global supply chains is coming to an end. I think supply chains are going to become more regional. Look at Intel as an example. Intel is going through an amazing restructuring, a transition of change. They are building more manufacturing capability or capacity within the United States. More companies will follow in that game plan. What's that going to do to the companies who are in Asia? Unfortunately, it means they're either going to have to build capacity closer to the end point of the supply chain, or get cut out of the European or the Western economy. So for me, that doesn't look good for Asian-based companies, East Asian-based companies. So Taiwan Semi, its global reach, I think, is in a transition now where it's not going to be as effective. And they're going to be forced to either add capacity or stick to their region. Okay? That's a big blown up view, right? A very big picture view of supply chain and what's going on. Now, for Taiwan Semi, individually here, if we look at their earnings, it was pretty solid, right? EPS, nice beat by 6%. Revenue, practically in line, but they were able to bring in $17.8 billion. Nice job. That looks good. On the chart here, they were rewarded, right? They've been going up, but again, we're in an overall bear market where if I put a trend line on here and I just go back to the end of March and place that trend line down here, line it up to get it perfect. I mean, you look at that, there's not much room to go up before running into resistance where you're going to have to fall back down. And lower support, where's the support at? Right now, let me shrink this up a little or bring it together a little bit. Yes, there is using the chart, it's a little laggy when I go live. But what I'm looking for here is any point of reference that I can use for this price point, where it's at. And we have to go all the way back to 2020. And what do we see right here? Well, let me get the trend line out here. And if I put a trend line right here, you can see that this line acted as resistance, keeping it down. And then once it broke through, and I'll just put the highlighter here. Once it broke through, right, it back tested, found support, and then it launched. We're in the opposite of that right now. What we are doing is, you can see a rally, we find resistance, and we drop back down. Okay, we just ran up, found resistance. What's the next move? The next move is down. Okay, so that doesn't look all too good just on a technical structure here for Taiwan Semi. All right, let's clean this chart up a little bit here. So technically here on the chart, Taiwan Semi is not in a great position. Okay, and actually I'm going to take this trend line from over here and I'm going to run it from the left side of the screen here to the right, just to see where this lines up here. Okay, all right, now let's go in a little closer now that we have that trend line up. And you can see that trend line, once we get this chart settled down, you can see that trend line has actually been acting as a point of resistance and a point of support. If I get the sharp marker out here, right through here, it was support. It broke through that, it came back up, and that line really, plus its short-term 20-day moving average, was acting as resistance. Now that it has broken above that, let's go to the 15-minute chart. Okay, I want to go to the 15-minute chart here and see how close is it to that blue line, and could that act as support? And I think it could. Yeah, a bit laggy here. Please be patient with me as we're moving this. I'll go ahead and pop that up on the screen there so we all know what we're talking about. Okay, so let me go ahead and take those two green lines off here. And then I'm going to try and make the chart a little easier to see. There we go. Okay, so once we broke above that blue line, okay, you can see we did that, and then we back tested that blue line all on the same day. Here we broke above it, and then right here we back tested and we found support. Next day there was a gap up, right? Some action early in the morning, And then we slipped under that short-term 20-day moving average at the close on Friday. Now, today, we're headed lower. We try to hug the 50-day moving average and the 20-day moving average, but we fell below that. However, we found support on that blue line. So here's what I'd be watching technically here on the chart for Taiwan Semi, and that is that blue line there. And I'll give you what that number is. It's right about where it closed. I'm looking at 83.43 as an area of support. If Taiwan Semi can hold that support, that would be great. But I think what we're going to see, and I'm going to go back to the daily view here. I think what we're going to see is a bit of time here of contraction, okay? Where let's look at a couple examples here. We have this example right here. This would be, let's see here, May the 31st until June the 9th, where it was basically moving sideways a little bit to the downside. Again, right here in this area where it was basically moving sideways. And every time you see price action moving sideways, that's contraction. And what does contraction lead to? Contraction leads to expansion. So here we have that contraction right here, and then it leads to expansion where we fell. Same thing right here. We have contraction that led to expansion and a move down, and then immediately expansion again back up. So I'd be looking for contraction to happen right now. That would logically be the next move for Taiwan Semi's stock. Unfortunately, I do think it can move lower, okay? There's a big deal tomorrow happening in Washington, D.C. That'll put a lot of weight on the semiconductor industry. And that's that big bill that could pass. But I'm going to talk about that in a little bit. I'm going to keep going with my notes here. So this is a quick little technical picture of Taiwan Semi. I think it's going to head lower. And then long term, I think it has some headwinds that it's going to have to face. Now, it can overcome those headwinds, and maybe those regional ideas that I have don't play out exactly like I think they will. And that could be a good thing for Taiwan Semi in the future. But I think the future's got some headwinds that's going to have to face. All right, I'll talk about semiconductors a little bit more here in depth when we look at NVIDIA and AMD and their weekly expected moves. Right now, I want to look at the 11 S&P 500 sectors here. As I lower this down to get them all in, you see a lot of red there. So 8, we can count them there, 8 of the 11 S&P 500 sectors did close in the red, with losses ranging from, let's see here, what would be the least here? 0.5% for financials, and on the high side, 2.2% for healthcare. Now, the only sectors in green for the day were energy, up 2%, and I do want to look at energy here. Energy up 2%, okay, and materials up 0.2%, along with consumer discretionary. They were also up 0.2%. All right, so energy here. Let's, I greatly appreciate that. Awesome. Thank you so very much. I can't show that on screen with the technology I have, but I greatly appreciate that super sticker. Greatly appreciate it. Energy here, you can see we've got an area of support. Really, it's that 200-day moving average that's coming across like that. That's what is holding up energy from dropping any further. And energy sub, or I should say oil sub $95 a barrel is a great thing. But we've been saying, and let's look at oil real quick, and we can do that US OIL real quick to look at oil. This is WTI crude oil. We said that back here on this level that oil could bounce, right? Many were saying, oh, this is it. Oil's going lower. We're done with. Oil's done with, right? We need to rotate out of oil. Oil bounced just like we said it would off its 200-day moving average. Now, the problem is for oil is that it's running into resistance right here. And this resistance goes back to the beginning of June where, bam, it stopped oil there, it stopped oil there, and stopped oil there, and now it's stopping oil this time. However, this time, oil is oversold more so than it was at any of those other times, meaning that volume could come in real heavy and push oil above that resistance area because it is so oversold. Okay? So that's one thing to watch. But this support area at the 200-day moving average, that is critical. Also, it aligns with a price point that is very supportive, and that's at $95 a barrel. You can see all the highlighted marks to the left here where 95 acted as resistance, then turned into support, held as support, and continues to hold as support. Now, if we want to look at the weekly expected moves here, we can pull up XLE for the energy sector. And I don't think I've plotted them out here, but I do have them on my chart. So XLE has a 3.24 point move up or down from that. So if we look at that, XLE, my apology. XLE, which is the energy sector, 71.85. Let me just get that lined up. Oh. All right, let me open this up just a little bit. I should have already had these there, but I have not put them on the sectors yet. Let's see here. 71.85. How close can I get to it? All right, there we go. We'll put a line there. And I want that line to match all of our other weekly expected moves. So I'm going to change it to purple. And bring that thickness up to 1. All right, so that's the high side, the upper level of energy. I don't think energy is going to move too much higher. And then on the bottom side, XLE, we've got 65.35. So 65.35. Bam, right on it. Now on TradingView, if you're trying to get these lines and you can't get your numbers to match up perfectly, if you put your cursor over here where the price points are, you can expand them, make them go up, and that'll open up more price points for your targeting if you really want to get to the penny of it. Otherwise, you can substitute and get, within a penny or two of it without having to open it up super wide. But if we look here at energy, you can see this, right? It bounced off its 200-day moving average for energy, which was right here. We had a gap up, but it stopped at its 20-day short-term moving average. So with energy up here already at the high side of the weekly expected move, and I'm going to do this to make it a little more clear. Energy right now is trading right here on this line. All right. I know it's kind of small. This is another way to use the weekly expected moves. What's our risk here? What's our risk? What's our risk if we were going long? Okay. Well, let's just do this. I'm going to put a box. Boom. 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 Okay. And this box is filled in to the best of my abilities here. All right, so that box is filled in. But now I'm going to change the color on this. Now, from where we are right now to the bottom of the weekly expected move, boom, like that, and then up here, and then this was also filled in. Okay, so what's our risk reward? Well, we have a much smaller window for a reward from where we close today to the upper weekly expected move. Okay, we have more risk to the downside to reach the weekly expected move. So where would you place your bet? From this point, would you expect long or short? Okay, that's a question you can ask yourself. Now, with this, you also can't use this just like any other indicator. You can't use it alone all by itself. Okay, let me just clean that up here. There are two other big factors involved with knowing whether to go long or short from where you are right here on energy. And that is that if I open this up a little bit more to see it a little clearer, today, the 20-day moving average coming down here into this range right here, it was rejected. But down here at the 200-day, it found support. So this is a very, very tight area that it's possible that what we see from energy is a bit of a wedge shape forming here with price being squeezed between the two moving averages. And then the price is going to have to go somewhere. It can't just get squeezed tighter and tighter and tighter. It has to expand. But whether that expand is up or down at this moment in time, I do not know. But it is something that we can watch and learn about, right? Okay, so that's the energy sector. I did want to talk about market breadth real quick because it did change a little bit today. Market breadth has either been going up substantially or down substantially all last week, okay? But today, it didn't quite act in that same way. Today, market breadth was more mixed. Advancers just barely outpaced decliners at the New York Stock Exchange, and decliners slightly outpaced advancers at the NASDAQ. So it was really, market breadth was 50-50 on whether it was long or whether it was short. You are very welcome. I greatly appreciate your support and you being here. Absolutely. Let's swap that up. Okay. Let's look at the 2-year and the 10-year, because that inversion, it is just holding strong and it's not moving. Let's look at the 2-year first. US 02Y. Oh, I got to have my cursor in the right place. US 02Y. We'll take it to the 10-year. Now, the 10-year closed the session 3 basis points higher. It's a 3.16. Basically, exactly where it's at right now. Now, we've been figuring out here that there is a resistance area up here building for the 2-year, somewhere right around the 3.2 to 3.22 area. Okay, resistance. And it looks like that's what it wants to do. It wants to continue to kind of march up, but it's finding resistance here. How is that going to affect it? Well, its shorter term 21-day moving average is kind of flattening out here a little bit, and that'll take it to this possible support area right about 3%. Okay, right about 3%. So it's getting squeezed as well. Oops, that's not what I wanted to do. All right, so it's getting squeezed. So that's the 2-year. Now, if we go look at the 10-year, that's US 10Y. Oh, I did T. Y. US 10Y. That'll take it to the 10-year bond. Now, it rose 3 basis points to 2.96%. That's where it closed. Right now, it's up a little bit on that. But we are still inverted. This inversion is lasting a while. And remember, when the 210 invert, that has historically stated that a recession is imminent within 6, 12, 18 months, right? Well, I think personally, we could be in a recession right now. I think we are. I think when we get Q2 GDP results, it'll be contracted, a negative number, and which that's technically what you need for a recession. Now, there's not much going on here with the 10-year. It does have a resistance area, but it seems to be following this particular pattern where it will move up, move down, move up, move down, move up, move down, move up. That's all it's doing, right? It is not breaking above that high that we saw back on June. And it's just staying in that little pattern that it's been on. But I think it is possible that we could see a bit of contraction here. Okay. I think we could potentially see the 10-year kind of just move sideways for a moment. I think that's a good possibility for the 10-year. Now, looking ahead, tomorrow's economic data will be limited to the June housing starts, right? How many homes has building started for? The expectation is 1.598 million home starts. Is that where it's going to be? It's a little bit higher of an expectation than last month. And then we also get building permits. You can't start building a home until you have the permit. So the permit, the building permit is more of a leading indicator than housing starts, because you have to have the permits first. Just common sense. The expectation is 1.68 million units. Will we get there? Or is construction having an even harder time than we expect? And they both come out at 8:30 a.m., and that's Eastern time. Now, ahead of tomorrow's open, we also get earnings from Johnson & Johnson, ticker symbol JNJ, Lockheed Martin, ticker symbol LMT, and Hasbro, ticker symbol is HAS, just to name a few. Now, the semiconductor space, I want to spend a minute here. We already talked about it a little bit, specifically on Taiwan Semi, but the semiconductor space, ticker symbol is SMH, and that's going to take you to the Van Erik Semiconductor ETF. I know we have ticker symbol SOX, SOXX. There are many that we can use, but they're all primarily very close to one another. Going back to the comments here. No, I didn't get the note. For the weekly expected moves, it was we can figure it out. Send me a message if you didn't get it. It was a post last night, and attached to the post was the weekly expected move. No, I didn't get the notification. That's odd. That's odd. I know for other services that I've signed up for, YouTube does not give me a notification. The only thing that I can suggest is making sure to, when you click the bell icon, is you have a choice for if you want to see every video, a few videos. Make sure it's on every video. Other than that, I don't have an answer for it. YouTube's algorithm definitely does not send out notifications for smaller channels. Just talking to the creator community, small channels, they kind of get pushed aside when it comes to the notifications, because of course Google wants to send notifications out for the bigger YouTube creators that are out there, not the little guys like me out there. I wish there was something I could do about it. Just the bell icon, that does seem to help, right? If you click that all video one. Yeah, I honestly, I don't have a solution for YouTube not sending out the notifications, but that is totally on their end. Okay, semiconductor space. All right. The ticker symbol here is SMH, and this is the Van Erik Semiconductor. Let me just do this right quick. All right, well, I'm thinking about it. All right, the Van Erik Semiconductor ETF, ticker symbol SMH. Here are the weekly expected move for it, and you can see basically where it closed. It's kind of, right there in the middle, slightly towards the bottom there. So bottom of the middle, if that makes sense. If we look on the weekly expected moves chart, and I can send that to you directly too, for any of our Patreon members, our investors over there in the community, if you didn't get it. Weekly expected move. So if we are looking here, let me get this thing lined up. Okay. So the weekly expected move is $8.50. And again, that's plus or minus. So it can move either way. And right now, on the top side of that, okay, we got 223.29. All right. And on the lower end of the weekly expected move, we have 206.29. That's where the option market says this will end. Now, if we look at some past behavior here, you can see that we are in a bearish structure, okay? So your bias should lean a little towards being bearish, and then of course that's extra cautious with what you're doing. Smaller position sizes, not taking on riskier moves. When there's a lot of chop going on, just stay to the sidelines. But for semiconductors here, I think it pumped the brakes today, right? And it pumped the brakes today as it's been driven mainly on what's happening in Washington, D.C. The solar industry, or the solar sector or subsector, and the semiconductor sector recently have been driven by what's happening with our government. Now, tomorrow, the Senate will hold its first procedural vote. It really doesn't mean anything. But the vote is for the $52 billion semiconductor manufacturing bill. That would be huge for semiconductors who are building capacity in the United States or building designs in the United States. But if you're a semiconductor company and you're wanting to expand capacity in the US, then you are voting for this bill to go through. This $52 billion semiconductor manufacturing bill will impact the semiconductor sector. Even though this is just a procedural vote and it doesn't mean it's going to be signed into law, it will still move the markets, because the markets here, they're a bit emotional at times, and they overreact about things, especially things that they don't quite understand, right? Okay. The Apple headline, we talked about that at the beginning. The Apple news, that's where the market dropped today. Absolutely. And to put that into a little more of perspective, what Apple has been rumored to have said that they are cutting back on hiring and they are cutting back on spending on some divisions. That's the phase 2 of this bear market. Phase 2 is the earnings bear market. And that's what Apple and several others who have recently come out and lowered their projections, lowered their forecast, lowered their guidance. That's what's going to lead to the phase 2 of this bear market. Okay. So we got the semiconductors there, the impact of this. I want to look at NVIDIA and AMD for just a quick moment, because that $52 billion semiconductor bill, manufacturing bill, it's going to affect the whole semiconductor space, even though the bill is limited in scope with what it can do. But let's look at NVIDIA, NVDA. And I did weekly expected moves for NVIDIA. So that should obviously help with NVIDIA trading here. So let me pull up the list here with NVIDIA. And you can see here we've already done that. So let me open it up just a little bit, and then I'm going to bring it up. Oh, not that way. I need to pay attention to where my what my cursor's doing. All right. So here, and this was a very interesting move here for NVIDIA, but this shows how precise these weekly expected moves can be, right? So today, NVIDIA ran higher and popped out above of the weekly expected move. It tagged its 50-day moving average. That's impressive. But then where did it close? It closed back inside the weekly expected move. That's why these lines are so powerful. They're like secret lines that only a few people know, right? Okay, but anyways, looking here at NVIDIA, let me get that highlighter out. The 21-day moving average right here was resistance, right here resistance, and even right there resistance, but somehow we popped above it. How did we pop above it? Because we had above average volume. This goes back to the very beginning of this live stream, where I was pointing out that in order to have moves that break resistance, or in the opposite direction, break supports, they're done on above average volume. All right? You have to have the people come in and put their money on the table. All right, let's clean this up a little bit. I want to go to the 15-minute chart so we can see the action that occurred here for NVIDIA and see how it reacted to that weekly expected move range. So let's do this. Okay. All right, so you can clearly see where NVIDIA, just make it a little bit bigger, it's right in the middle of the screen here, where NVIDIA this morning ran up, broke out of the weekly expected move, and, well, it was right about the timing that the Apple news came out, and that Apple news caused a reversal right back down. So that's what we had there. Apple news broke NVIDIA and brought it back down to the weekly expected move, or within that. All right. So let's go back to the daily chart, and I want to go to AMD real quick and its weekly expected move. All right, let that load there for a quick second. All right. Here we have all of these structures we've looked at today. My gosh, they look so similar. And they're performing in such similar ways. All right, so I'm going to open this up a little bit here. And then bring it up. Bear with me for just a second here. Okay, so we have AMD here. And today, first I want to point out the 21-day moving average hasn't really been playing a big role. I mean, it barely acted as support on Friday. I mean, I really wouldn't call that support there. But today, this line that's coming down like this, diagonally across the chart, it has played many different roles. It has played support, resistance, just back and forth. But it's a high impact line. It's not necessarily a trend line, but it's a high packed line. I mean, it gets tagged all the time as resistance and support. And today it just ended up being resistance. Now let's go look at the 15-minute time frame. That'll give us some context here on whether we should be feeling bullish or bearish. I mean, right now, most everything we've looked at, it's got a bearish bias to it, just like it should in this context of this market. All right, so when we look at AMD here, we can see this morning it broke above that. And then again, right around the time that Apple news came out, it just fell. It moved really in parity with NVIDIA. So not a lot there that we can gauge from it. But what I would say is these setups look like they are going to go through an area of contraction. All right. Price action is going to be limited. They're not going to move a whole lot. I mean, that's what I'm getting with all of these different charts, that there's going to be a lot of choppiness. And as a matter of fact, if we look at the VIX for today, I want to make sure I get the right one. I want the CBOE, the volatility index. And if we look at where it landed today, it is quite fascinating. It landed big time out of its wedge that it's been in. Now, July the 8th, it did the same thing. It came out and it closed below or outside of that wedge that it's been in. And then today, all the way down to that 200-day moving average that's coming up along like this. So that 200-day moving average is now acting as support for the VIX. The VIX closed at 25.3. That means volatility should be lower. And with all of these charts that we've looked at today, it looks like we're going to be in for a choppy ride where price action doesn't move a lot and price action is contracting. It's contracting, leading us to a little bit down the road. It could be a week down the road. It could be a month down the road for another expansion move. Since that's coming potentially in the month of, or the end of July or in August, those months are typically, if you look at the seasonality charts, they move sideways to maybe a little bit down. And all the charts that we have seen so far today all match with the seasonality of July and August moving sideways slightly down. There's no rallies. There's no falling off the cliffs. That's what it looks like we're setting up for right now. And all of these charts seem to back it up, where you have short-term moving averages, and I'll just use the VIX here as an example. You know, short-term moving averages here acting as resistance, and then the longer-term moving averages here, you know, acting as support. And price action is just going to continue to tighten and tighten and tighten until we get to a point where the market feels like, you know, things are good or things are bad and it's going to expand. So it really boils down to that. We're in a phase of contraction, or we are going into the beginning of contraction. And then again, 2 weeks from now, a month from now, 2 months from now, well, that contraction will lead to expansion. Okay, if you could do me a real quick favor, because it really helps, smash the like button, share this video with a friend. Those two actions really help a small channel like this, and it really helps to fight against that YouTube algorithm so that our videos get out there for others to see. And it just takes a second of your time to do it, and I greatly appreciate it. And of course, you can join us in beating this crazy market by clicking the first link in the description. Get instant access to our weekly expected moves, trade setups, top 10 stocks in 4 different categories, market analysis, and more. And our investor community is coming to Discord soon to help you along your investor journey to becoming financially independent. So click that first link in the description to get instant access today. We'd love to see you there. Oh, yeah, can't forget this one. If it's your first time watching, consider clicking subscribe. And if I don't get you subscribed today, I'm working really hard to get your subscription in the future. All right. If you have questions, put them in the chat. Now's a great time to go over them, and we will. Let's see here. How do you see Netflix doing on earnings? Poorly. Poorly. I see Netflix doing a very bad job. And this is go. I don't know why it took me so long to realize this, but I just realized that Netflix ticker symbol is NFLX, right? National Football League. And what's the X stand for? Is that the indoor football? I don't know. Or is it the spring football league? I don't know. I just thought it was interesting. I'm surprised I didn't notice that anytime sooner. Okay, tomorrow Netflix has earnings. Okay, and let's do this and that. Okay, yeah, you can see the beautiful fall of Netflix here. Something interesting is happening behind the scenes with Netflix that I don't think we are privy to. We know that Netflix has been searching for an advertising technology partner. Okay. We know Roku was in the running. We know Comcast was in the running. And then out of the blue, Microsoft is selected as the winner. And Microsoft will build out the technology for Netflix to have an ad-supported tier for their content. Now, there was an article that was in Yahoo News, and there's an analyst from Needham that suggests there is a secret agenda. And Microsoft could actually be acquiring Netflix. Think about it. Apple has devices. Microsoft has devices. Alphabet has devices with their Pixel and other categories. Amazon has devices. Where's Microsoft's home devices? I know they've been working on something, but it's not nearly as prominent as Alphabet's and Amazon's in-home products, right? Okay. Let's look at content. Apple has content. They have a streaming service, right? Amazon has content streaming service. Alphabet has content and streaming service. Where's Microsoft's content and streaming service? So that got me thinking. Microsoft potentially is getting in the back door of Netflix. They're going to work real closely together, and then bam, what's the next thing you're going to hear? Microsoft has acquired Netflix. I think it's a real possibility. A real big possibility. Let me know if you think that that is just too far out there or what. But just a little side note there of down the road thinking for Netflix here. All right, so we got an estimate of $2.95 per share EPS on revenue of basically $8 billion. All right, we go back and compare what they did last quarter. They reported $3.53 of EPS per share on $7.8 billion. So they were close to that 8 billion, and they definitely broke on EPS. Let's go back one more quarter. $1.33 on EPS and 7.7 billion. So $1.33 compared to $2.95. All right, so we've got a little comparison there. I know you can't do apples to apples comparison between last quarter, previous quarter, and so forth. All right, I'm gonna hop over here to my terminal, and I'm gonna plop in NFLX. I always say that now. NFLX, like doing something for the football. All right. I just want to see what they might have to say about Netflix earnings. There may not be much in here right now, but I don't think Netflix is doing very good at all. As a matter of fact, I think they're going to end up with a net loss of subscribers, and that's definitely not going to help Netflix and earnings. So let's see. I don't want to go too far back in time. So here, I tweeted this news out after the close today, but I'll read it here for you. Netflix down slightly on report. It is asking customers in 5 Latin America countries to pay a fee to use shared passwords, and that's according to a Bloomberg article. If Netflix is going after customers who share passwords, then they are desperately in need of cash. That's what it says to me. Let me know if you think differently on that line. But I think if Netflix is going after customers to try to get every penny they can, they are hurting for cash. I think that's a very logical conclusion that we can get from that. So yeah, so we have that, and then we have Lightshed Partners comments on streaming ad market, says Netflix has a $4 billion advertising opportunity. Disney is likely under a $1 billion. So that's an interesting take, that once Amazon does provide an ad-supported tier, that ad-supported tier could bring in $4 billion in advertising. And that would greatly help Netflix. But right now, in the short term, I don't think Netflix has got what it needs, if you know what I mean. I don't think it has what it needs. Now, the future of Netflix with a potential Microsoft acquisition, with the opportunity, the ad opportunity from a paid tier, those are two great things. Let's see what the options market says about Netflix. let me just real quick. Okay. So we have the weekly expected move for Netflix, right? Okay. There is also such a thing as the earnings expected move. Okay. And you use a similar a similar equation per se to figure it out. So here we are clearly with the weekly expected move. Now for Netflix, the weekly expected move, or I'm sorry, the earnings expected move is actually a pretty big move. Netflix reports after the close, and the options market is giving it a $27.91 potential move. That's a big move. So if I get my calculator out here, hopefully we can do this real quick, because I don't want to hold up your time here just doing math calculations. Okay, so if we, yeah, that is a huge move. Absolutely. I mean, there's someone here that have a much, much bigger move. There's a 45, a $34 moves, $30 move, getting a $33 move. There's some big moves out there. Tesla's expected move on earnings is $52.26. That's Tesla's expected earnings move. All right. Which again are different from the weekly expected move. They both can exist together at the same time. And you can get your earnings expected move, and it can play with your weekly expected move. So Tesla, that's a big expected move on one day. All right, Netflix, we got 27. So what we do, let's see, 179.75 plus 27.91 equals, all right. So I might have to open this up a little bit more to get as accurate as possible. So what we have 766. All right, that's as close as I can get right now. And I'm going to make this a different color. Let's go orange. All right, so purple is the weekly expected move. Orange is the earnings expected move on the upside. Now we go to the downside. We take the 179. And we get a lower low here. All right, let's see. Okay. All right, here's Netflix. All right. This is the earnings expected move and the daily expected move. If you notice here, The orange is the earnings expected move. Purple is the weekly expected move. The first thing that comes out and it catches your eye is that the earnings expected move gives you a lower high and a lower low. That means earnings is expected to not be very good, right? If your earnings expectation were then above, giving you a higher high and a higher low, that would be more bullish for that company's earnings. A lower high, a lower low, that's more bearish for a company's earnings. It definitely is a huge move for sure. So let's do percentage. All right, from where we closed right now today. Okay, if we take this 190.92 and I get as close as I can to it, to the upside, just to the earnings, that's about an 8.9% move. On the downside, though, if we go all the way down to the orange, that's a 20.1% move to the downside. So there is way more risk involved in a Netflix earnings trade than there is reward. Okay. So if we, let's see where, here we go. Let's do this. We're going to go from where we are now up to here. Just make a quick little box. Keep it green. We're going to make a second box from where we are right now down here. And we're going to make this one red. Okay. So here you better visualization here. The top green box, as a matter of fact, to make it a little more clear, let's do this. Let's go like that. And here, we're going to make it red. There. Better visual. So Netflix comes out after the market closes tomorrow, and they give us their numbers. And right now, just as visual clue here from the options market, and remember, the options market is efficient and is right 68% of the times. That's saying there is a greater risk to the downside than there is to the upside for Netflix earnings. I'll keep this up here, and then tomorrow, during our live stream tomorrow, we'll come and look and see how we did with this box here. All right. It is a big move, yes, but remember when we did the measurements, it's a bigger move to the downside. Where is my... Here we go. All right. Where we are right now. Up. So 8, not 80. Wow, that would be huge. 8. And then we'll measure here to the downside. And then come back tomorrow and see how accurate this was. All right, so with these two measurements here, our upside potential is 8.67%. Our downside potential is 20.5%. All right, that's that's where it is. All right, we'll go ahead. That's all I had to say for today. If you can remember to click that like button and share this video with a friend, that would be very helpful, especially for a small channel like this. And if you really like this perspective and you want more in a greater context and deeper dive, then click the first link in the description. Join investors just like you and me. You can get access to all of this instantly to help you along your investor journey. So I hope you do take advantage of that. Another 40% would be insane, wouldn't it? Oh my gosh, could you imagine? Oh, excuse me. Could you imagine another 40%? That would be incredible. I think that's why the options market has such a big spread on this. Is they're just not sure, right? I mean, look at these big drop downs. Earnings drop down. Earnings drop down. And then what could we get here? Could we get another big earnings drop down? We'll see. I'll leave this set up just like it is. If you want to take a screenshot so you can prove that I didn't change a thing, I'm going to leave this right here so we can look at it tomorrow. All right. You are welcome. Let's go ahead and wrap up today's live stream. We went a little long today, but we had a lot to talk about. I greatly appreciate it. Make sure, though, to click that like button. That helps out greatly. And if you are subscribed, not getting notifications, the best advice that I have is to click the notification bell and click on all videos. Other than that, I mean, it's YouTube's algorithm, and whatever they decide to do is what they do. You are very welcome. Have a wonderful evening yourselves. And other than that, I'll see you back here tomorrow after the market closes. Have a wonderful evening, and I'll see you in the next video.